All right, welcome back to TalkTickers. Today we're diving into USA Compression Partners. That's ticker USAC. They just dropped their Q2 2025 earnings, and let me tell you, it was a record quarter. But more than that, they painted this really powerful picture for future growth. So let's get into what it all means for the stock.
Here's the thing that's kind of weird, right? You have a call just packed with good news. I'm talking record revenues, super strong pricing, and this huge demand story linked to AI. And what did the stock do? It barely moved. It closed up just under 2%. So you have to ask yourself, what exactly did the market miss here? And maybe more importantly, does that spell opportunity for investors? Okay, to figure that out, we've got to start with the basics. Let's just look at the raw results. This is the what of the quarter, how their numbers stacked up against what Wall Street analysts were predicting. And honestly, the numbers were just plain solid. I mean, USOC delivered a really clean beat on both the top and bottom lines. You look at GAAP EPS, it came in at 22 cents. That's a penny better than the consensus. Then you've got revenue hitting $250 million, also blowing past expectations. So look, this wasn't just some squeak by beat. It was a really strong, fundamentally sound quarter, no matter how you slice it.
So what's the engine behind these great results? It really comes down to pricing power. There's this key metric in their business, average revenue per horsepower per month, and that was up a solid 5% from last year. Now, what that tells you is they're not just busy, they're getting paid more for what they do. And that extra cash, it flows right down to the bottom line.
And that kind of pricing power, it's built on a foundation of just insane demand. Their fleet utilization held steady at a super robust 94.4%. I mean, think about that. Especially their big horsepower units, the really profitable ones, those are pretty much maxed out. So yeah, the numbers are telling a very clear story here. Strong performance and just fantastic operational control.
Okay, so the numbers are good, we've established that, but the real story from this call, the part that makes you sit up and pay attention, the so what, is this massive long-term growth story that management is weaving. And it's all built around one of the single biggest trends on the planet right now, AI. And the CEO, Clint Green, he really just laid it all out there perfectly. Think about it. All these data centers, all this cloud infrastructure being built for AI, they need a staggering amount of power. And not just any power. It has to be reliable 24/7. And management is making a huge bet that natural gas is the only fuel that can actually meet that need consistently. And they didn't just throw this idea out there. They backed it up with some jaw-dropping numbers. Get this, we're talking over $250 billion in spending from just 3 of the big tech giants this year alone. On top of that, utilities are pouring over $200 billion into just upgrading the grid to handle it all. So management's point is, this isn't just some temporary upswing. They're arguing this is a fundamental, multi-year shift in demand for natural gas. And of course, that means a huge demand for their compression services. Now, a huge growth story is fantastic, but you have to be able to actually manage it, right? So while they're telling this exciting AI demand story, they're also doing something really smart in the background. They're actively de-risking the company's finances to make sure they're in the perfect position to capitalize on it. And a really crucial piece of that puzzle is cleaning up their capital structure. They've made massive progress converting these things called Series A preferred units into just regular common stock. Now, you might be asking, why do I care about that? Well, it matters because it makes the whole story simpler for investors and it cuts down on their future cash payments. That gives them more firepower to keep paying and maybe even growing that distribution down the road. And their plan for handling their cash is super disciplined and really clear. It's basically a 3-step process. Priority 1, protect the distribution. I mean, they've paid it for 50 straight quarters. That's a huge deal. Priority 2, get their debt levels, their leverage, down to their target of 4x or less. And priority 3, fine-tune their debt. Refinance notes, extend credit lines, just get better borrowing costs. It is a textbook, by-the-book strategy for building a rock-solid financial foundation. So let's step back for a second. We've got all the pieces on the table now, right? A record-setting quarter, a really compelling growth story driven by AI, and a super smart strategy to de-risk the whole thing. Which brings us right back to that original puzzle. Why did the market just kind of shrug? To understand that,
we need to put USAC's performance in a bit of context. So if you look at the past year, USAC has pretty much kept pace with its direct competitors in the energy sector, but it's lagged behind the broader market, the S&P 500. And what that suggests to me is that the market is still looking at USAC like it's just another standard, boring energy infrastructure company. It's not pricing in that unique, explosive growth potential from the whole AI demand story. And that gap, well, that's where a potential catch-up trade could come into play.
All right, time to bring it all home. Let's put everything together and give you our take for the next call. We've gone through the numbers, we've heard the big story, we've looked at the market context. So, what does it all mean for the stock from here? Yeah, this is where the rubber meets the road. We're going to boil all this analysis down to one actionable view. You've got fundamental strength on one side and this potential for huge story shift on the other. So, what's the trade? Okay, here it is. Our rating on USA Compression Partners is outperform. We just believe that the combination here, the strong execution they're already showing, plus this massive growth story that the market seems to be sleeping on, it just creates a really compelling case for the stock to do better than its peers and even the broader market. So what are the things you need to watch for? The catalysts are pretty clear. First, keep an eye on their execution. They've got a backlog of almost 40,000 large horsepower units. That's guaranteed future revenue, so we need to see them deliver. Second, listen for that AI demand story to start catching on with more investors. If that happens, you could see the stock get re-rated higher. Third, just watch their costs. They need to keep their margins stable. And finally, watch for that performance gap between USAC and the S&P 500 to start closing. That's the real tell. So look, the key takeaway here is actually pretty simple. You've got a really solid, well-run company that's now getting turbocharged by this incredible long-term growth theme. The market seems to be sleeping on it for now, but we think the catalysts are all there for that to change. Of course, just a reminder, this is for informational purposes only. This is not financial advice.